Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Cut that has come in today's trading session. 1.31% downtick is what we're seeing for the Taiwan index.
At some point, I'm going to lower them because otherwise you could never do business with them.
We should find support at the 30th of April low, which is 24,198.
Sectors you look at paints, you look at these OMCs as well. I'll keep an eye out on a few of these names in today's trading session.
Craig would be the chief executive or officer of Berkshire.
Up a third of 1%. So 24,400 plus on the Nifty.
Big shift has happened on the monetary side, where there is definitely an urging of the credit institutions to get back to growth.
IT, metals, Reliance Industries, all these indices are up nearly 1% on an average.
You can see the EBITDA at 4683 crores compared to the CNBC TV18 poll of 1458.
TechM, good deal wins, strong pipeline, bringing in more customers from a consumer and a BFSI standpoint.
24,450, that is where the Nifty is at, and contributing to the gains is Nifty Auto.
That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi and Nigel. And all in all, it's a good day. We're holding up in the green, gains of close to about 0.5%. Yeah. Some loss of momentum from the top of the trading session. The Nifty even crossed the 24,500 mark, but given the fall in banks, ONGC, etc., it's not bad. And mid-caps, look at the way they're going.
Which is why I was going to say good seems to be an understatement when you're looking at the broader markets. A near 2% rally on the mid-cap index, looking good. We have lots of earnings analysis coming up, including a conversation with Mahindra and Mahindra. Another superlative quarter from M&M. You just can't find any fault.
Well, indeed, and if you're looking at the index, we have been spending time in this range itself. And the sense you get is if things are not going to blow up on the border, the longer we take at these levels, we continue to hold onto the range and protect the lower levels, maybe the bounce will be even more ferocious. So let's see how that goes. But for today's trading session, without the big batsman, that is, the Nifty Bank, yet the Nifty is holding strong and the breadth of the market as well, firmly in favor of the number of stocks that are advancing. In just a short while from now, we'll have the management of Mahindra and Mahindra joining us. For the time being, let's hop across to Mitesh, who joins us to help us out with the trading call. Well, Mitesh, we're talking about the session not being so bad. From a macro perspective, we have got this tailwind because we have Brent crude prices that have cooled off, and that's where select sectors are firing. But on the index, where do you see us heading? And fill us in with a couple of trading picks.
Good afternoon. I think it's the Bank Nifty which is showing slight lack of momentum. Otherwise, the Nifty is doing pretty well. And the key here is to see if we can, recover in the last, add on to the strength in the Nifty in the last 1 hour and close about 24,500. But the structure remains positive. So in case you get a dip before that, I think that will be a buying opportunity. On the stock side, I have a RBL Bank, which is a buy. Keep a stop just below levels of around 201 here and look for targets of 218. And Varun Beverages, that's another stock which, after a good pullback is trying to recover and is changing the direction. So buy here with the stop just around levels of 528 and look for a target of 560.
Okay, those were some trading ideas. The Nifty is now at 24,462. The high today was 24,526. So we've slipped about 60 points from the day's high. And we're still not able to conquer Friday's intraday high, 24,589. So that is an important level to track. But after consolidating over the last 3 trading sessions, that's 3 days of last week, today at least markets have managed to grow. But let's get our conversation straight away going to Mahindra and Mahindra. Stock is up close to about 3%. All-round performance very strong. Both auto and tractors firing for the company, gaining market share, improving their margins too. Rajesh Jejurikar, ED and CEO of auto and the farm sector at M&M, is now with us on the show. Rajesh, great to see you in person. Thank you very much for joining us.
Thanks, pleasure to be here in the studio.
And let's start by congratulating you on another good quarter. And Rajesh, we were just discussing this outside the studios, right? kudos. And I don't know, from the outside, I sense the pressure because you folks are delivering quarter on quarter on expectations that are rising more and more. But pretty phenomenal. Maybe let's start with the margin picture, because not only have volumes gone up, and that we see on a monthly basis when the numbers come, but you've managed a good show on the margins as well. So
yeah, I think we're particularly, Surabhi, firstly, thanks for having me on the show. And it's, of course, much easier when the quarter's been good. so we are happy to talk
do
about
come in case you have a one or bad one, do continue to come.
Then we definitely have to come.
Go ahead.
So what's particularly gratifying, I think, are the tractor margins. Because normally Q4, market share is stressed for us, but we gained very strongly on tractor market share. And it's been one of our best Q4 tractor. So what we call core tractors without farm machines and other things was as high as 20.8% PBIT margin on core tractors, which for a Q4 volume was really good. So I think that was a really strong number to put out. The auto margins have been also very strong, and it's the best peer margin by far. In Q4. So, we I think have had a good margin performance on both the tractors and auto.
The question is, can you build on that from here on? Because commodity inflation seems to be benign. Is that your own assumption going into FY26? And plus then you have operating leverage coming in. On the tractor side, your exports are firing. And then even autos, you've got so many new launches. So what's the expectation on margins from here on?
Yeah, so remember, we don't put out a margin expectation.
No.
We have put out a volume expectation for SUVs just now. So on SUVs, we are saying mid to high teens for SUVs, including electric. And for tractor industry, we are saying high single digit. And for LCV less than 3.5 ton, we are saying high single digit. So in a way, the volume momentum should be good. So commodities, to your point on commodities, is very hard to say. I mean, it's a very volatile world, but right now, our sense is it will be reasonably benign. We're not, unless something geopolitically goes totally awry.
So directionally, can margins go up to your mind, at least for the first 2 quarters?
Yeah, the way I would answer that question, and Surabhi was talking about rising expectations.
See what I mean?
Yeah. So the point is focus on the right metrics. As long as you're focusing on the right metrics, outcomes come. If we start focusing on how to take margin up, normally the answer to that question is going to reduce volumes. Just to finish that, Surabhi, I think our focus is how do we keep volume momentum going up while keeping costs under control. And if you do that, then margin does tend to improve in most situations. But if you put the horse before the cart and say, how are we going to increase margins, then you start taking a set of decisions by which you start affecting demand. And then when you start affecting demand, anyway, you don't gain margin because, it's such a volume-driven industry.
But is this sustainable? I mean, we're talking 9.2% for auto and 19.4% for tractor. Are these margin levels with your current volume mix, is it sustainable?
Again, without giving guidance, let me give an input on how to think about it. So we will next year start seeing a much higher EV proportion in the mix. And we've said EV margins as a percentage will be lower even when EVs will make the same unit margin as ICE, right? Just because of the denominator effect. So whenever we look at a blended margin, we are going to see the margins lower than what they've been in the past. But on a like-to-like basis, we would want to, without losing volume momentum, look at how do we sustain margins. But that's going to be not a guidance, but an effort by way of how management would like to make it work. The standalone margins also now have the contract manufacturing we do for electric vehicles within M&M.
Okay.
And that does dilute margin because that just has a conversion cost on the total value. So M&M Auto Division makes electric vehicles and sells it to Mahindra Electric Company. Okay. And that's only on a additive conversion cost. So the percentage margin there is much lower. So that we will show that separately in the analyst call separately in the afternoon.
Okay. All right. Hi, Rajesh. Welcome to the studio. Congratulations on a good showing. And congratulations on the new wheels. I saw you driving that nice, sleek new car the other day. So good on you. Let's talk about business, though, and market share. What's the updated market share on SUVs, EVs, and tractors? What did you end FY25 with? And since you're sounding so optimistic, I'm guessing that you'll want to, work up those numbers. Where do you see that headed?
So let's look at the three segments. Let's start with tractors.
Yeah.
Tractors this has been our highest ever tractor market share at, I think, 43.3% for the year. We've gained market share 2 or 3 years in a row, which is uncommon in a market which is not easy to gain any market share. And, we always say that the strength that we have in tractors is entry barriers are low and it's actually very sticky, which means it's not easy to gain market share. So having gained tractor market share 2 years in a row and we are at a level of 43.3. So that's very, very reassuring and feels very good. The auto, we look at revenue market share for SUVs. The reason we do that is our average selling price is significantly higher than any of our competitors. For that, I think we crossed 22% revenue market share, and again, we've gained 1.8 share points in the year on the SUV side. Even though we don't measure volume market share in SUVs, we have been the number 2 volume player consistently for many quarters. Again, that's not a metric that we want to chase because we don't want to start doing things which is not part of our brand DNA. And we are very clear that there are some segments we will not play in where we don't have a right to win. So really, every time we put out a set of wheels, we want Nigel to say, wow. And if many more like you say, wow, then, that's going to lead to market share gain. But we don't want to be seen as one more car on the road, which nobody knows what's the brand on it. So when they see our car, they should feel good. So that's on the SUV market share. I think the really strong story is the LCV less than 3.5 tons, where we've again gained a lot of market share this year. We are more than 50% market share now. South, which was an area we were not so strong in, again, we've gained a lot through that. We've launched Vero, which is a new product 6 months back. That's helping us gain market share in that segment too. What we're doing with our core product, Max City. So really, I think across the 3 segments we play in, all have seen very good market share gain. The last mile mobility, which is the electric 3-wheelers, we continue to be number 1 through last, which is we're at about 40%, 39-40% market share there.
Rajesh, just coming back to the guidance for the coming year. On tractors, I think it's high single-digit growth for
the industry. Yeah.
For the industry, okay. Because you last year grew at 12%. So you're confident about outpacing the industry. Your growth for tractors and auto in FY26, since the focus is on volumes, will it be better than FY25 to your mind?
Surabhi cautioned me before coming in. Don't let people raise your expectations when you walk into the studio.
Expectations are already elevated.
You've given us the
industry. The questions, which encapsulate those elevated expectations.
How should we look at your volumes versus last year? For tractors and auto?
I think from where we are on tractors, the first objective has to be to sustain this level of market share. It is a very good market share. Okay. Also, we wouldn't want to start discounting to increase market share. I mean, that's the one thing that we've been very focused on, that tractor market share has to be product and reach-led growth and not pricing-led growth. We can gain market share very rapidly if we start diluting margins. I think what we've been able to do well is get the balance between market share gain and margins. Okay. And we would want to keep that balance. So we don't want to again, set ourselves to say, yeah, we're going to gain tractor market share and then start getting into price discounting. That's not how we want to do it.
I have one last question. Nigel, you have one before that?
Yeah, I want to just ask about the stress. We're seeing some bit of stress in the urban demand, right? While rural looks pretty good. Give us some more details on that, because that's a little bit worrying from an industry perspective, obviously not for y'all.
Yeah. We
continue to say, wow, but what about this stress that we're seeing in urban demand? If you could throw some color.
Yeah, so I think there has been some stress in urban demand. We haven't seen it in our portfolio, and we've been able to get good growth, including in April, where our SUV portfolio grew 28%. I think several things will help improve that over the next 3 to 6 months. One is the change in the income tax slabs, which starts in April. So there will be greater cash that will get released.
Yes.
The interest rates are going to be on a downward trend. So I think that will again improve cash flow, improve borrowing costs for car loans, etc. So that will enable urban demand, because both of these points are more significant in the urban context than they're in the rural context. So both of these will be positive enablers. It's good to see the stock market stable, and that does drive urban demand. You know, there is a sentiment issue in buying cars, and when the perception of wealth being eroded, personal wealth being eroded, starts coming in, then the car buying tends to get discretionary, and then people start postponing it. So it's good to see the stock market kind of come back to a healthy level. So I think all of these will help urban demand.
All right, so just one thing, just one factor. Even though demand is a little bit sticky, you know, being a media professional, you get a lot of you know, queries or favors saying, is it possible to get a Mahindra vehicle sooner? So tell us, what is the current waiting period on your vehicles? Because I recall it was a few months actually the last time.
For the EVs, I just asked him. He's saying 4 months for the EVs, right? 4 months?
Yeah.
And
around that.
I mean, and how do you expect that to kind of shape up?
So first, let me answer Nigel's question and then connect it to yours. So the product on which we right now have most waiting period is ROX.
Okay.
And that is a few months. We are increasing the capacity somewhat, but overall Thar demand, including the 3-door, has been really robust. We've ramped up Thar. Now Thar as a portfolio in April actually crossed 10,000 for the first time. So 3-door and 5-door together, we sold more than 10,000. Now that's quite a journey for a product like Thar, which used to 5 years back sell 600 a month. So it's, you know, moved to selling more than 10,000 a month, which is really what we've ramped up to. On the question of EVs, we're going to follow a very calibrated approach to ramping up for 2-3 reasons. One, we always knew that on the production side, a lot of new technologies, software, new features, and we have to ramp it up slowly as we stabilize the quality. But what we're also learning is from a customer experience at time of delivery. A delivery event in an electric vehicle takes at least 2 hours. In ICE, it was literally a puja, key handover, and you drive off. But here, customers come in with entire families, so many questions, a lot of explanation to be done. Then we need a follow-up visit to the customer again to, you know, walk them through all the features and how they're to be used, setting up the charging. So, you know, we don't want to be messing up on the customer experience in our desire to get lots of vehicles out in a hurry.
Fair point. You know, I dare say, I don't know, maybe a couple of years down the line, when histories are written, M&M, Mahindra and Mahindra, through this phase, I think the last 2 years, perhaps ends up becoming a case study in business schools. I mean, how to do everything right, whether it's product positioning, maybe it's branding, maybe it's the customer experience you're talking about. How do you get into that sweet spot?
And you know, there's a topic we didn't touch upon, but last year they generated 10,000 crore of cash. Isn't that correct?
Yeah, that's correct.
Yeah.
Yeah, I mean, if you could just quickly tie it in, quick update on SML as well and when that sort of integration happens. And I have to ask you this, because during the quarter, when, you know, this whole global environment is playing out and the market gets the worries, now whether it's Tesla, whether it's some other US policy that makes it easier for Ford to come back in a big way in the country, any of these American automakers, could that disrupt the M&M story in any sense, even if it's a small sense?
You know, if you look back at the Indian story over the last 20 years or more, I think the Indian customers are probably the most sensible and the hardest to fool. They will not buy anything that does not make sense. And when I say that, the price has to be right, it has to have everything, it has to work well on Indian roads, it has to last long, it should give a good resale price at the end. So there's every parameter which goes in, including demand, brand, and all of, I mean, the aspirational value and all of that, but that has to be well calibrated. So any player who wants to just bring in a product which is doing well anywhere else in the world and then, you know, kind of say, yeah, it's going to naturally do well here because it's done somewhere else, I don't think we've seen a story like that play out in India at all. Not in tractors, not in commercial vehicles, and not in cars.
Okay, all right, Rajesh, we thank you for coming down. I'll tell you what, I'm the one who appreciates the vehicles, but I think if you look at prospective buyers, the other two are most. Thanks a lot for coming
down. They're the more aspirational customers for us, let me tell you that.
Admiring from a distance. But thank you so much. A pleasure having you in the studio.
Thank you so much.
Bye.
Okay, all right. Well, let's get on with the chart then. We have Deepan Mehta who joins us. Director Alexa Equity is on the show. Hi, Deepan. You heard that chart. Rajesh is sounding very, very optimistic and confident about the way ahead. Give and take a little bit of near-term blips. What's your view on the stock? I think that's the stock that you've liked, right?
Yeah, Najib, good afternoon and thank you for having me on your show. But the key question we didn't get the answer for is that how do we get an M&M vehicle out of the queue? You should have pressed on further over there because really the waiting period for the top models is quite incredible. And that clearly shows the hard work which they've done on new models. They've captured the imagination of a lot of customers as well. And that's reflected in the numbers of M&M. So generally very positive on the stock. As a disclosure, we and our clients are invested in it. And I think that maybe at corrections, you could look at getting into this particular company. And overall, I do expect auto industry to start doing well, considering that crude oil prices have fallen and interest rate costs also have come down.
Stocks crossed 3,000 as we're speaking, and now it's just about 7 or I think 8% away from its 52-week high. The high was around 3,200, a little over 3,200 for M&M, back to 3,000.
I remember when there was that fear that Tesla is coming in there. I remember Jefferies had put out this note. They said that the stock fall is exaggerated on the downside. The segments that they cater to, the pricing is very, very different. And they believed it was a good time to buy. I think if I remember correctly, the stock went down.
2,500?
Yeah, it went to around 2,500. So from there,
What a quick bounce back, snap back for Mahindra & Mahindra, sub 2,500. Was that a month back?
I think a little more than that.
January. I think it was just around when Trump inauguration was happening and there was this fear about, now Tesla is rolling in. But in hindsight, for those who bought it, it was a dip to buy perhaps.
And stock is now up more than 35% in the last 1 year. Deepan, what about RR Kabil? Again, here the stock had fallen on concerns that large players are coming in, setting up capacity, so there is going to be a lot of disruption, pricing pressure. But now RR Kabil itself is getting aggressive. They've announced a capacity expansion plan. The street likes it, and plus the numbers are good. Now, this is a stock which is also about 37% away from its recent highs. Is this a stock to buy?
Well, Rima, I think markets are rewarding good set of numbers, and really RR Kabil's numbers are very impressive. The kind of growth rates which they have got, I think they will be industry beating. And from that point of view, I think stock has rallied. But, valuation-wise, it is pretty expensive. I would say fairly valued. If you consider that there's new players coming into the market, and that's going to cause a squeeze on existing players. From that point of view, I think there's a layer of uncertainty as well. And what has happened is something which is in the past, the quarter which has gone by, and the competition is going to come going ahead also. So I don't feel, that enthused to buy into RR Kabil or that, for that matter, any cable company at this point of time. I think that it's better to go for the appliance companies. That's where I think a lot of action will take place, considering that we have such a warm summer. And overall, I think consumption also will improve post these income tax relief coming into place and lower interest rates as well. So that's, I think, my strategy as far as consumer-oriented stocks are concerned.
Deepan, you wanted to know how to jump the queue? Deepan, you wanted to know how to jump the M&M queue, right?
Yes, that's the question.
Let's just a minute. Hold on. Let's get in Mitesh back onto the show. Mitesh, I believe you've got lucky. You've already booked your new Mahindra Mahindra vehicle. Well done on that. Deepan, if you're interested, Mitesh is the man to go to because I believe he's driving the new Mahindra Mahindra vehicle. So congrats, Mitesh, on that. And I'm sure Deepan's going to give you a buzz post-market hours or maybe sometime in the next few minutes or so. But tell us, what's the view on the stock, Mitesh? We were just talking about the way the stock bounced, and I just managed to pull out the old Jefferies note. They had written sometime during February 23rd, where they believed that dip on Mahindra & Mahindra was a good buying opportunity. How's it looking on the charts?
It's looking quite positive, Nigel. I think that correction which happened on the stock happened along with the market decline, and now I think that correction is over. My sense is that the first target should be closer to about 3,200, which is where the stock had peaked out. In fact, if you look at the last a year of kind of history, we have got about 5 or 6 highs stocks being made around the 3,200 mark. So that's the first target I'm looking at. Once we start getting past that, then I think we're getting into new territory, and then we should even look at 3,500% of that.
Okay, and congrats on the vehicle, Mitesh. We're not asking for sweets, but, congrats on that one.
Yeah.
Okay, all right. Well, let's get back to Deepan. Deepan, I want to ask you about, JSW Steel. That one's pulled back a little bit. There was an asset that they acquired, Bhushan Power and Steel. They managed to turn it around, but now the courts have struck that down. Could possibly go in for liquidation. What's your call on the stock?
Yeah, I would view it as a setback, of course, for JSW. And now with so much of uncertainty around steel prices and steel volumes as well, and the entire Trump tariffs is causing a lot of uncertainty as far as commodity prices and commodity volumes are concerned. And keeping in mind the valuation of JSW Steel, that is trading at very rich valuations as compared to its historical averages in the past and compared to some of the other steel companies. And the volume growth also has been quite tepid for the entire steel industry. So no doubt, I think it's a very well-managed steel company, great linkages, backward linkages into raw materials, and very aggressive expansion plans as well. But on a risk-reward basis, I would give steel a pass. In any case, Nigel, you know that we're not that hot on commodity stocks per se, perhaps with the exception of cement. So I would not like to go overweight on JSW Cement.
Dipan,
Steel.
okay, got that. Dipan, just before we let you go, this rally that's playing out on the entire Adani Group, let's just get the stocks up. Adani Green, Ports, Power, everything's up. Total Gas, 11%. This, I think, started with that Bloomberg report that came in the morning suggesting that the group has some meetings lined up, perhaps with the Trump administration, to work out some of the legal issues that they are embroiled in. I don't know if it's just a flash in the pan, if it's just sentiment, but what would your advice be on any of these group stocks?
So, I think that the Adani Group companies are trading more based on their fundamentals, and all the controversies are more or less been put to rest. By and large, I think the numbers are decent. And what I've noticed is that over a period of time, these stocks have remained flat if you take a long-term average, and earnings have improved. So the P multiples, which were excessively high, now have come somewhat into a manageable, I would say reasonable level, although not exactly cheap. And I think a few more quarters and numbers will grow and stock price remains where it is. These stocks also will come into a reasonable value zone. So I think investors can wait for a situation where the P multiples make sense for these companies and then look at these companies on merit and on fundamental basis. There's no doubt that all of the Adani Group companies are sitting on very, very, I would say, great assets, good ROIs, and some of the concerns around debt also have come down. So I would put them on the watch list and wait for an opportune time when you feel comfortable with the valuations.
Dipan, thank you very much for joining in. Need to get into a short break. As we do that, here is some good news for all our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, our articles, financial world updates at your fingertips. So don't wait. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or you could just scan that QR code on your screen. Welcome back. The Nifty slowly trying to inch back towards that 24,500 mark. The gainers list include the Adani Group stocks, Adani Enterprises, Adani Ports right on top. Look at that 7% up move on it. Adani Ports has crossed the 200-day moving average comfortably and now inching towards that 1350 mark. M&M, of course, is higher, 3.2%. TVS Motors, Tata Motors also up nearly 2%. Trent is a big mover. And then you've got oil marketing companies on the back of the plunge seen in crude oil prices as OPEC plus says that they will be accelerating production. So IOC, BPCL up. On the way down, you've got ONGC sulking in trade. Rahul Veera, fund manager, equity investments at Nippon India, AIF, is now with us on the show. Rahul, thank you very much for joining in. So how are you going about navigating this market? April, we saw markets snap back, though towards the end, we've started consolidating a tad bit. You all had a cash position of about 14%. Have you started deploying it? And if yes, where?
Yeah, hi. Good afternoon to everyone. Yes, so we have started deploying the cash. We remain positive on the markets going forward. So almost last 1 week, we saw $570 million of FII flows coming in. So very clearly the indicators from the macro front, right, all the peak pessimism that was playing out gave us a good opportunity to deploy in the past 1 to 2 weeks for sure.
Now, what is the cash on the books?
Will be less than single digit.
Single digit now?
Yes.
Versus about 14% towards the end of...
We deployed almost 7% itself in the past 1 or 2 weeks.
Oh, okay.
Yeah.
And do you want to tell us where you deployed? What are the, we can see that you like M&M, HDFC Bank, Reliance Industries. These are all stocks that you are overweight on. But broadly tell us, incremental money, that 7%, where is it gone?
Yeah, so the names that you took, but incremental we'll be looking forward to add some mid-cap and small-cap names in the multiple sectors as well.
All right,
so
Rahul, hi.
The sector that we like, yeah.
Okay, which is the sector you like? Sorry, missed that?
Cement is the sector that we like. We are incrementally positive on the cement sector.
Indeed. Okay, Rahul, good to speak to you and thanks a lot for joining in yet again. Let me quiz you on both those 2 points. Last number that we have is your cash was at around 14%, which you're telling us has come down now to single digits. And your large caps accounted for around 59%. Now, given that the incremental money you'll start deploying in mid as well as small caps, what is the mix you're looking at between large caps, mid and small caps? If you could help us out with that. And the second point on cement, since you like cement, what are you going for? The big boys who are ruling the roost or the smaller names that will have to come to the table and probably sell out?
So we are trying for a mix of both. We are going with the large cap names. So higher allocation will go towards the large cap name. And some of the mid cap, small cap names where there is a potential acquisition target remains there.
Okay, all right. So that's about cement, mix of names. You want to give us a hint? Between the large cap names we know, but in these potential targets, which segment are you looking at? I mean, is it the south-based guys? Is it some guys in the north-based?
So one of the south-based guys are having a very large debt. They're going for probably group-level restructuring. There could be some decent alpha generation. Also, if you see that for the past 2 months, the maximum price rise in the cement prices has happened in the south region. We believe this will help in your deleveraging exercise as well. Plus, the debt to EBITDA ratio that we are expecting over the next 2 to 3 years will come down very significantly. Will help one of these south region players for sure.
And overall, in terms of your, in terms of your allocation, what are you looking at? Large, mid, and small cap?
So broadly, from 59% of large cap will come down to 53 to 54. So incremental allocation is going to go towards mid cap and small cap.
In the last 1 month, you're also brought down your holding in IT names. I think TCS, Infosys were stocks where you've lowered your holding or weightage. We know the reasons, but how are you thinking about IT now at this juncture?
See, they remain a value buy, but at 4 to 6% growth for the large cap names, right? Giving a 20-25 times multiple. They largely are like dividend yield stocks going forward now, 4 to 5% of yields that are coming through in these names. But incrementally being an alternate asset investment manager, we look for alpha names, pure bottom-up stories. These are more of allocation names going forward. So we believe that they will not be very high alpha generation in these names as of now.
Okay, got that sense. Rahul, hi, good to have you on the show. On financials, because it's a very, very wide and diverse basket and stock reactions are also so different, right? Wherever there are growth concerns today, Kotak, or SBI stocks are falling, wherever NBFCs were showing any sort of issues with margins, again, there was pressure. What are you liking and what are you avoiding here?
Yeah. So see, from a broader allocation perspective, we prefer NBFCs over banks, right? As I discussed last time, that the credit growth in the system, although the overall sell side is managing close to 14 to 15% of credit growth, we are working with 11 to 12% on the broader PSU as well as the private bank baskets. So when you see those numbers, the kind of valuation we are seeing is slightly on the higher zone going forward. So we prefer the NBFCs over banks. And within NBFCs, again, home financiers is where the compounding will happen, and some of the MFI names where some of the alpha generation will happen from a bottom fishing perspective.
Okay, Rahul, how are you approaching pharma? I can see Mankind Pharma as part of the pack. I don't think it has much global exposure as of now. It will be reasonably protected from Trump's tariffs. So that's the way you're going?
Yeah, so that is one way to look at it. CDMO plus domestic pharma is the overall allocation that we are looking forward to. From the larger branded generics on the global side, we are avoiding the bigger names as of now.
Since Mahindra & Mahindra is an overweight for you, you would be tracking it very closely. For fresh investments at this juncture, at this point after the kind of outperformance and the expectations that are set in, will it be able to beat and generate alpha?
Yes, we are positive on the name. Going forward, see, it has a little bit of rural exposure as well via the tractor exercise, right? Almost 40% of the EBITDA comes from the other rural exposure that they have. We believe the kind of EV plus UV plus the tractor exposure, I think it's a very good combination to have in the portfolio.
So even at these levels, risk reward is fairly favorable.
Yes, absolutely.
All right, Rahul, what about Swiggy and Zomato? I'm guessing you will be using the apps. But what about allocating money? Do you like any of them? As we speak, Swiggy is actually up close to around 10%. They had put out a filing regarding Bolt, which is their quick food delivery platform. They are saying that is doing very, very well on a day that Zomato went ahead and said that they are looking at shutting that down. So it seems the street is, grabbed onto that piece of news. We need to see how the quick commerce delivery itself does pan out. But at least in this vertical, the quick food delivery platform, they are talking it up. Any exposure to these platform companies? Do you believe that Swiggy should be catching up with Zomato, or do you think it's going to get far too competitive? You'll stay away.
Yeah, in the seed, over the next 6 to 12 months, we'll see the outcomes, right? Where Zapto in the quick commerce is playing out their best. The recent update that we got from the management of Zapto that they had to raise funds at the personal individual level, right? At a 16% credit that they're seeing. So we see that competitive intensity may like for 1 or 2 quarters more, but going forward in the industry, we believe it's going to be medium-term positive. So from allocation perspective, we are looking at these names, but at least for 6 to 12 months, we'll have to take we'll be in the watch list, and probably then we may relook at the names again at that point of time.
eClerx? I mean, eClerx is a stock that you track, right? And I think you own it in one of the portfolios. Now it's underperformed, 28% down so far on a year-to-date basis. If I look at it from its 52-week high, the stock is down 35%. What makes you bullish? Is it the fact that its stock is corrected and therefore it's now attractive? And it's also an industry which generative AI can disrupt.
Right. So see, if the diversification that the management is focusing, right, away from the proper BPO services to moving towards KPO services, they are diversifying from that. So even they are well aware of the AI disruption can get, but the management, we are very confident that they will be able to diversify going forward. Now, in terms of valuations also, some of these names in this pack, in the KPO, BPO pack, are relatively better off than the IT pack that we saw in the large cap names. So we're seeing some growth here, and the multiples are also relatively better in some of these names.
Okay, all right. Final question before we let you go, Rahul. Wanted to ask you on this renewable energy theme. Solar, people were talking it out. Suddenly you had Vari Energies that came out with a brilliant set of numbers. The stock saw a sharp spike up, then everyone said the lock-in is ending. So now the stock will come under pressure. As we speak, the stock is up close to around 5.5–6%. They have guided for very good numbers in the remainder of this fiscal. So it seems for the time being, the sun really hasn't set on the sector.
Right. So see, for solar energy, right, almost the guidance from the government is close to 50 gigawatt per year for the renewables, but the execution has been close to 22 to 24 gigawatts per year basis. So incrementally going forward, we believe the growth will be there in the industry, but what are the valuations that we're paying for, right? So we have been on the sidelines for this sector, We believe post FY27, FY28, without any government incremental regulations which are supporting the industry, we believe the ROE ROCs may not sustain. So we have a little bit of concerns around this sector. We've been on the sidelines for the names.
Thank you very much for joining us, Rahul. Great chatting with you. Need to get into a break. On the other side, we'll come back and talk market technicals. We'll get in a few BTST calls from our technical experts.
Welcome back. You're watching Closing Bell and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets have come off a little bit from the top. Mitesh is back with us. Mitesh, give us your trading picks.
I have a BTST on CESC. Keep a stop below 163. Look for targets of 169 for tomorrow. And the other one is RT Industries. Keep a stop just below levels of 445. Look for targets of 458.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of other stocks. Then we have the Nifty banks. That continues to trade in the red on the back of the Q4 earnings coming in from key lenders, SBI as well as Kotak Mahindra Bank. But how did the overall Q4 numbers look like for all large lenders? Abhishek is putting out an exciting piece on that. Abhishek, tell us more.
Well, to begin with, large lenders have reported their Q4 FY25 performance. And if you take a look, at the comparison table, private banks have seen robust deposit growth on a sequential basis, anywhere between 5.5% to about 7% range. In fact, at a time, this has come in, at a time when deposit growth is a big concern in the industry. Seasonal in nature in Q4 for deposit growth to happen for SDFC Bank and Axis Bank. Now, SBI has seen the weakest weakest deposit growth on a sequential basis at just 2.9% in Q4 FY25 amongst large banks. If you take a loan growth, and if you take a look at the loan mix, the corporate portfolio has actually been shunted down by private banks because of the unfavorable yields. That is what many managements have commented. So, the likes of ICICI Bank and Axis Bank and Kotak Mahindra Bank as well, they spoke that, unfavorable yields have led to corporate book not growing that much. On the other hand, if you take a look, SBI's, corporate growth of 5.5%, that is corporate loan growth, has been one of the highest amongst all the large banks. Now, net interest margin has improved quarter on quarter for most of the banks, especially ICICI Bank and HDFC Bank. They have seen the highest sequential growth in their net interest margin. However, for SBI, it's actually shrunk by 1 basis point on a sequential basis. Now, operational efficiency was another area of focus. It's been the highest decline for SBI, their cost to income ratio declining by 184 basis point on a sequential basis. Axis Bank and Kotak Mahindra Bank actually saw an increase in their cost to income ratio. The meaningful part in any bank's result is the return ratios or ROA. So SBI saw a decline in its ROA, that is return on asset, on a sequential basis, while Axis Bank and ICICI Bank have seen the highest increase in their return on asset ratio on a sequential basis. If you take a look at the valuation picture with reference to price to book value, large banks like HDFC Bank, ICICI Bank on the private side trade between 2.7 to 2.9 times, while SBI is trading at 1.5 times price to book value on a 1 year forward basis. Back to you.
All right, well, let's hop across to Vamakshi. She's here to tell us about RR Cabel, NetWeb as well as Gravita. They're buzzing in trade. Vamakshi?
Well, absolutely, Nigel. RR Cabel, the stock is up on the back of a very strong set coming in from the company. It has come in much higher than what the street was expecting. Revenue saw an uptick of almost 26%, out of which largely the growth was contributed by wires and cables, which saw an uptick of 28%. The FMEG business also was up nearly 13%. The margins have improved substantially for RR Cabel at 8.7%, and the net profit too is seeing an uptick of almost 64%. As far as FY25 volume growth is concerned, it came in at 7.1%. This is much below what the company had guided for. But the management joined us on the channel and they said that they're expecting volume growth of nearly 18% in FY26. They also believe that wires and cables margins should be around 8 to 8.5% this year, and FMEG business, more importantly, will be breaking even in the first half of FY26. Along with that, they've also announced capex plans at units in Gujarat, and they say that this will require fresh investments of nearly 1,200 crores, out of which 200 to 300 crores will be on from the term loans. NetWeb is the next counter that we're watching out for. Very strong numbers here as well. When we look at the company's full year revenue and PAT numbers, they've managed to meet their guidance. Revenue saw an uptick of nearly 24% sequentially. The EBITDA margin too has improved substantially to 23.8%, and the net profit is up nearly 42%. The order book, on the other hand, has seen a bit of a dip on a sequential basis, and that could likely be on account of higher conversions. But nevertheless, the analysts say that the order pipeline going forward is very healthy. And lastly, let's also look at Gravita India. Revenue out here saw an uptick of almost 21%. The margins have improved to 11.9%. The lead business is doing very well for the company. Margins at 13%. The EBITDA per ton is also, seeing an uptick of almost 6%, and the net profit resultantly is seeing an uptick of almost 37%. So strong numbers from all these three counters.
Okay, all right, Vamakshi, thanks a lot for that. But I think the stock you need to focus on right now is GAIL. That's the one that's seeing a bit of an uptick, and that's because PNGRB will hold an open house on gas pipeline tariff review on May 14. Basically, this means that things are moving in the right direction. A tariff hike could possibly come out rather soon, and that's where we're seeing a bit of an uptake. Remember, CLSA, they have upgraded GAIL just a few sessions ago to outperform from hold. They raised the target price as well to around 210 from 175 rupees earlier. And they had mentioned that a 20 to 25% tariff hike is possible by June. So that's the reason why, in fact, the street is excited. The next date is going to be May 14th. But in short, things are moving on expected lines. And that's why, in fact, the stock is seeing a bit of a spike up. Let's get in Anand Tandon, who joins us now on the show. Anand, any view on GAIL? There's a bit of a tailwind that's coming in terms of this news flow. We'll have to wait for the outcome, but it appears a hike could be on the cards.
Well, that is true. And if that happens, obviously, it will be positive for GAIL. But, you have to remember it's a utility, so there will be a one-time adjustment. And after that, it will then go back to business as usual. So for the near term, I think the likelihood of a price hike is in your favor as an investor.
Got that point. By the way, I'm looking at some of the stocks that are moving in the mid-cap market because it's such a big day for mid-caps. The index is up almost 2%. And look at the advanced decline ratio. You've got almost, more than 1,850 stocks, 1,850 stocks that are advancing right now. By the way, RR Cabal's performance seems to have rubbed off on names like Polycab as well. Polycab is up 6% as we speak. Anand, hi, good afternoon. On RR Cable and this entire space, the wire and cable guys, the management today sounded very, very optimistic about improving margins. They're putting a lot of money to work, adding capacity, and almost unfazed by the heavy-duty competition that's coming into the space. What would your advice be on stocks like Polycab, Havells, RR Cable and others?
These companies have done very well over the past several years. But I think, as you pointed out, one, the competition is more. And I think cyclically, I would argue that from here, you are probably seeing the best in terms of real estate development behind us. That is not to say that these companies only deal with real estate, because they will also be providing inputs into industrial products. But by and large, I would imagine that the large part of that also comes from real estate development. And to my mind, I see that sector at least kind of peaking out from here and perhaps not doing so well over the next 24 to 36 months. You also have to remember that, the management does tend to be overly bullish. If you look at their own commentary over the last 1 year, it has been a lot better than what they have actually managed to achieve. So at this stage, I think, you have to keep in mind some of the valuations. So while there is this kind of cyclical euphoria in the market right now, and one is looking for newer sectors to look for, I would argue that the good old sectors are probably more likely to perform over the medium to longer term. And it is not necessarily to try and invest in every new kid on the block.
All right, Anand, I wanted to ask you about Swiggy. A stock is bursting away. It's up close to around 13%. And the reason we understand is that they made a notice on the exchange, they disclosed in a filing that Bolt, which is their quick food delivery platform, that in fact, they're talking that one up at a time when Zomato, spoke of shutting down Zomato Quick or Zomato Everyday, which is their quick food delivery platform. So because of that, Eternal now, we are seeing Swiggy spiking up. But just want to caution our viewers as well that their lock-in period will be ending later this week. So that's when the real test will come in for Swiggy. For the time being, moving higher on very, very large volumes. Anand, what's your view on the stock? When it listed, it went dancing away. It gave a quick 25-30% return. But from there, now it's sharply below its issue price.
Well, I think people are now looking for opportunities to do some bottom fishing, and I would imagine that Swiggy falls in that category. But as you pointed out, what Zomato has said in their commentary is something that one should be looking at carefully. A company which has executed exceedingly well in terms of deliveries and in shortening times feels that it is not viable if you don't control the entire value chain to be able to deliver within less than half an hour. Now, that's a problem that Swiggy can't be facing differently. I mean, they must be also having the same kind of problems. And if one large player, which has, like I said, executed exceedingly well, seems to find that that is a problem, it cannot not be a problem for Swiggy as well. For most of the other categories anyway, you also now have Amazon throwing its hat in the ring. So I think if nothing else, competition too will pick up. So if you think one side is going down, of course, they will not be in the food segment, but for everything else that they have in their inventory, they will also be competing with all these players. So overall, I think, one has to be a little cautious about companies which are in this space. There is no doubt the space is growing very fast, but I think so are the valuations.
Early days, multiple strategies, different contrasting views coming in from both Eternal and Swiggy on this. Anand, do stay on. Need to slip into a short break. We'll come back. Welcome back. The mid-caps are going to end with a 1,000-point gain at the index level, 1.85% higher on the mid-cap index. And look at some of these stocks. IGL, where the company has increased prices by 1 rupee per kg effective the weekend, increase for both Delhi and the regions around Delhi. IGL is ending with a gain of nearly 7%. Gravitas, strong number, stock up 7-8%. Parag Milk, we've been talking about it. Profit after tax surging 167%, and that's going home with a double-digit gain. And Bajaj Consumer numbers appear to be disappointing. The stock initially, took a downtake on the back of the profit, sliding about 13%, but now it's managed to recover. There you have it. From that fall, post numbers, the stock is now back in the green. So buying coming in at the lower end. And NetWeb is another big mover today. Strong numbers, stock is up 13%, and it's also pulled up some of the other data center businesses. So I think the last time I checked, some company called E2E, Black Box, these companies are also, have come in on the investors' buying radar today. Anand, any mid-cap, small-cap whose numbers you've liked and you would like to purchase or you would recommend buying?
A wide range of themes out there, so it's a little difficult, and I don't want to name particular names. But by and large, I think you're still looking at, the delta from here can be in those areas where you have to assume that we strike up a good trade policy with the US, which is good for Indian manufacturing. And therefore, the traditional areas of focus should be textiles, chemicals, and so on, where we already have a strong manufacturing base, which can cater to a market which requires some of those products in the absence of China or any of the other producers. So that, to my mind, would be the safest call. If the trade deal doesn't happen, of course, all bets are off. But for now, you have to assume that the trade deal in some form or shape will come through.
Okay, all right. So that's some perspective on a couple of these stocks. Anand, just a quick question again on auto. When we were discussing this earlier, M&M, you wonder when stocks are rising, when they keep rising, and the numbers keep looking so good quarter on quarter. You sometimes wonder if it's if it's too much of a peak. But then the numbers are adding up. What are your thoughts? What would you say? The stock is still not at its all-time high. It's still about 7-8% off it. Would you advise buying, or is it too late if you haven't bought the dip?
Well, if you look at the entire auto space, that's probably the only company which is worth looking at, because the two-wheelers aren't doing anything. The heavy commercial vehicles aren't doing anything. You are basically then looking at tractors and the cars. Among the passenger vehicles, the only segment which is growing is SUVs, and there Mahindra & Mahindra has an excellent portfolio and is doing very well. Tractors, they have an indomitable lead, and that is doing exceedingly well as well. Some of the other areas, for example, in terms of hotels and related properties, is also something they have a play on. The only part which is a little weak would be, I imagine, the IT sector. And they haven't done much in the finance so far, which it hasn't actually kind of, rocked anything. So if those two areas were also things which could come back into shape, you would imagine that, there is considerable upside that may still be possible. But with the 2 or 3 areas that they are actually dominant in, which is the auto, tractors, and the autos and the tractors, they are already well positioned to be able to move up and at least continue to be in the portfolio. So at this stage, I would imagine, from a lack of anything else, you might want to be in M&M, forget the valuation.
By the way, watch for Coforge, comes out with numbers later today. And this is a company which has also been delivering very strong numbers. And this quarter, the street is anticipating a more than 3% constant currency revenue growth in Q4. And just to reiterate what the management said, in October, they said FY25 will be a standout year for the company. And last quarter, they said next year promises to be very solid. So they've been delivering solid numbers, and the commentary will be awaited very closely. But just counting down to the close now.
Yeah, that's right. Well, let's wind down the markets. Anand, request you to stay with us. Let's do a quick recap of what went on today. The Nifty goes home with a gain of around 120 points. Remember, it was without its star performer. That's without the Nifty bank giving any kind of support, which was down close to around 200 points. What went home with losses? Well, you had SBI and Kotak Mahindra Bank. Both of them were on the losing end, and that restricted some of the up move in terms of the Nifty. Otherwise, on a closing basis, we could have very well got past the 24,500 mark. What did well? Adani Group stocks, Adani Ports, Adani Enterprises, both of them zipping away up 6 to around 7% in trade. You had Trent as well that bounced back today. That was up close to around 4.5%. And Shriram Finance and Bajaj Finserv, well, both of them found their firm. Mahindra & Mahindra came out with a solid set of numbers. We had the management telling us that they're bracing for a bright FY26 as well. So that one was up close to 3.5%. Eternal and Swiggy, both of them did well in trade today. Swiggy, in fact, outperformed because of that disclosure they put on the exchanges. So that one, in fact, was up and about. And ITC, the big boy in there, was up close to around 1%.
Okay, that's the large cap screen. Let's talk about the mid caps because mid caps have had a stellar day. Like we've been pointing out, look at Motilal Oswal, 8.5%, 9%, KEI Industries, 6.5%. Of course, stocks like Polycab and RR Cable having a field day. RR Cable, 13% on the higher side. That's what we've got. JBM Auto, 7%. Lots of names. And of course, let's not forget HPCL, BPCL and IOC, 4% crack in crude oil prices. Brent below $60 a barrel. That spelled good news for many of these oil refining companies. HPCL up 7%. That's BPCL 3.5%. Let's pull up HPCL as well. Really a tall gainer in terms of today's trading action. Losers really, apart from the large banks like Kotak and SBI, not too much to talk about. KFin, Novama, some of these capital market plays, they've seen a little bit of profit taking. And V-Mart Retail ended about 7% lower. But overall, a very good day for the broader market. Well, the bell has gone, so first day of the week is over. That's it from the closing bell team. But do stay tuned. Vinny and I will take the action forward on Markets Forward.